Well, good morning, everyone. Thank you for attending our presentation. So OIII Mining, it's a company based out of Canada, assets in Val D'Or, one of the best jurisdictions in the world. And we have around 3.9 million ounces of gold, $100 million in cash, and a market cap of around $140 million. Yes, you heard well. We have $100 million in cash, 3.9 million ounces, and a market cap of 140. Great opportunity to come in the story. Let me go through the story. Two main assets, Marban and Alpha. Marban with a preliminary economic assessment, a fundamental value of $423 million. Yes, $423 million, a market cap of 140, $100 million in cash. Alpha, a project that we bought from a company called Alexandria Minerals for $25 million. We bet, in fact, $20 million. Agnico Eagle came in the middle, and we ended up buying it for a little bit more money. So there was interest already from major companies. We believe in ESG because we want to put this mine into production. It will not be the first time that our group puts the mine into production. In fact, you will probably ask the question why OIII Mining is the third iteration of Osisko. Osisko put into production the Canadian Malartic mine back in 2014. This is the second time that we will be putting a mine into production in Val D'Or, an area where we feel extremely comfortable working. Valuation is certainly a very important point, and this shows to where we are and the amount of value that this company has fundamentally, not only in terms of cash, not only in terms of the resources that we have currently, but also in terms of where we are on a preliminary economic assessment basis, and we're moving towards a pre-feasibility which will be ready next year. We have as a major shareholder Osisko Mining with around 27% because we span out the assets from Osisko. Institutions around 19%. Management is mostly myself and our family office out of Peru. We believe in the company. We have an important amount of shares in the company. We feel every time our share price goes down, and we will enjoy when the company starts running, which will be in 2022. We're very certain that this will be our year. We're being covered by different analysts. In terms of fundamental value, they're showing around $5.17 as an average price. Now, let's talk about Val D'Or a little bit. Val D'Or is an area where there is already been mined 30 million ounces of gold, an area with potential for an extra, I would say, another 30 million ounces, an area where new deposits are being discovered every single time, and every time someone says that there is no more deposits, suddenly there is another deposit. After Canadian Malartic was discovered, everyone thought there was nothing else there, and there you go, Agnico made a discovery with East Goldie, and now there is another 14 million ounces of gold. We believe that this is an area which is a cortical structure that essentially allows the fluids to come up, very well prepared, and an area with a lot of potential to keep finding more deposits, as we will see in the area. Here's the area where we have two main assets in the case of Marban and also in Alpha. We have also another potentiality, if you want to call it, for the project, which is who is around us. And independently of what we can do by ourselves organically, which is to put Marban into production and subsequently into Alpha, we cannot forget the fact that there is other companies around us and where M&A could occur. In our case, we are only 12 kilometers from the Canadian Malartic mine, which you can see there on your left-hand side. And we have 2.5 million ounces, again, of open pitable resources. The Canadian Malartic mine will run out of ore, and this is public information, by 2026, which is the moment when we start into production by 2026. If we were to send the material to Canadian Malartic, we could be in production as fast as 2025. In our case, we will be having our pre-feasibility study ready by third quarter of next year. And in the case of Alpha, we have also the option to buy the Orbel mill for $5 million. We have a time frame of 4 more years. So at any time, the idea will be we put Marban into production, and then Alpha, there is potentiality for M&A transactions, which could happen with Canadian Malartic or with the other groups that are in town, Kina, which is West Dome, Goldex, which is Agnico, and Lamac, which is El Dorado. So we are in a perfect area where there has been M&A transactions. In the case of QMX around Lamac, that was bought by El Dorado. In the case of Monarch, was bought by Yamana. So it's an area that it is very active. So on top of the importance of the fundamental value, you may have the potentiality of any M&A transaction in the area for what we are doing. Marban, as I mentioned before, is the area where we're putting the project into production. Very important to mention, over $60 million has already been invested in the ground. And what we are doing essentially here is moving everything from inferred category to measured and indicated. That will be ready by next year in the first quarter, and that will be part of a press release going out. The pre-feasibility study will be ready in the third quarter of next year. What we're doing here is not only drilling inside the pits, but also trying to maximize the areas around the pit. We will see a long section going from Quirens to Nolartic, which essentially shows the high-grade component that we have in the open pits, and also the ability of starting with a very low strip ratio and then going to Marban, where we will have a very big overburden, but the money will be made at the very beginning. And as you can see, most of the resources here shows that our resource is around 1 gram, but the results that we're getting from the infill in the pit, it's showing that maybe we'll end up having a little better grade, which will be fantastic. Our PEA shows very robust numbers. We have at a 1450, remember right now we are around $1,800 per ounce. But at 1,450, we have a 25% IRR and $423 million net present value at 5% discount rate. If we use current prices, so we're talking about $1,800, it will be around $700 million in terms of net present value and an IRR of 38% with a 2.5 years payback. Another important thing from here will be the Capex. Capex is one of the lowest ones in the industry, and it should not be an issue to raise $256 million. How do we plan to exercise this? Well, 2 options. Either we go for a loan once we have the feasibility, or if we are extremely lucky, one of the projects that we sold to another company called Monita Gold is valued right now at $50 million. If they end up having a rally and the company sold, say at $600 million, our part, which is 30%, will be around $200 million, which will cover essentially for what we have to build. But we'll have to be extremely lucky to match up everything. In any case, $256 million is not a big amount of money to put in production a project of this quality. But on top of the open pit, we have the ability here to show an underground potential, which is the extension of the Camflo mine. How would this affect our project? Well, it would allow us to move from 115,000 ounces production to probably around 150 to 160,000 ounces of production per year. What do we have underground? This is from previous drilling, historical drilling, which we are intending essentially to go from the top and re-drill these areas and show the amount of, hopefully, around 1 million ounces in the next year. What we have here, you see 7.2 meters of 21 grams, 4.7 meters of 50 grams. In the other chute, we have another 3 meters of 33 grams. So we do see the high-grade component in here. This could be a catalyst for M&A as well, because as of right now, the project was always seen only as the potential for an open pit. With a high-grade component may attract other groups into the story. Here is a plan that we have to increase. We know that in these 22 historical holes, we have around 250,000 ounces. So the idea is to re-drill that so we could actually have things under 43-101 and then expand this at depth. We see here our Alpha project, where we have a lot of potential. We are understanding now much better, thank you to Mr. Ruben Padilla, we are understanding much better here the project. We now understand that there is a component of a porphyry. We do understand now that alteration will be very important. Now we know that when we are far from the area of mineralization, we need to keep drilling. Now we know that when we're close, we have to continue. And that has been showing us very good success in this project in particular, which is Bulldog, where we already have in this area, and I will do a long section in there to explain this. We have around 300,000 ounces already here. The idea is to continue to drill this and expand this towards the west, and we will see quite a bit of potential growing in this area. So we feel extremely confident of Bulldog and Kappa on how we can grow the deposit. But as well, the last thing that we will do is to drill this area on the top, just south from that area that says triangle, which is an area that the veins looks very similar to Sigma Lamaque. So in summary, what do we have? We will have results from Camflo that will show the high-grade component. We will have in the first quarter the resources for Marban. We will have the resources for Bulldog, and we will have the pre-feasibility study. That's why I'm saying 2022 will be the year of O3 mining. We have enough cash, we have the right people, we have fantastic projects, and I think with this, we will be able to explain to the market what a great deposits we have in this company. And more importantly, I really hope that we end up having a discovery in the middle of all this mix. So it's a very simple story, a story of fundamental value. Again, we have a market cap of $140 million. We have $100 million in cash and a net present value for one of our projects of $423 million. With that, that concludes my presentation. Thank you very much for your time and your attention.
Thank you. Yeah, questions from the audience? Okay, then maybe I start with a question. 100 million cash, 145 million market cap. How can this happen? How can this be true?
Well, I guess the explanation I could have is that the market don't care about preliminary economic assessments. There is a perception that these PEAs are full of gas or garbage, whatever you want to call it. So our job is to essentially tell the market, you care that's fine. I'll show you a pre-feasibility study. We'll move all our resources from inferred to measured and indicated, and then the market will believe. If the market doesn't want to believe that, we'll show them Camflo. And if the market doesn't believe that, we'll show them Bulldog. And if the market don't believe that, well, we'll sit down in cash and wait for someone to buy us in 3 years.
Okay.
Yeah.
More questions? Okay. There's still the opportunity to have one-to-ones or to speak with them. Thank you very much for your time.
Thank you very much for your time.
Thank you very much for being in Frankfurt.
Yeah, thank you. Thank you.